Hi everyone, and welcome to another quarterly update video for clients. I'm joined by David once again, who is with me to provide an update on what's transpired over the quarter and any changes to portfolios that he's recommending going forward. So with that being said, David, maybe you could kick it off with what's happened over the quarter and just a general update for the clients.
Sure, thanks Tom. I think there's no hiding from it. The performance of the portfolios has been disappointing. When you look at the numbers in an absolute sense, which is what we're really striving for, they've been poor for the quarter and over the year being down 4.15% to 11.7%, which is a big number and one of the biggest 12-month numbers we've seen since we've been doing this over about the last 15 years. In a relative sense, you can probably say they're in front of a lot of the indexes and a lot of the other managers that are similar. However, we're not happy with it. We don't like it. We're doubling down on our research and making sure we've got things right. And it's really as a result of this sudden inflation rate coming through and interest rates rising very, very suddenly in all asset classes, pretty much from cryptocurrency to shares to property have been under pressure, and you've seen some really strong falls. You've seen Europe is pretty much now, most people will agree, is in a recession. The US is heading into a recession, and Australia may have a very short type of recession.
Great, and we met with the managers last week. Were there any key takeaways from those meetings?
Yeah, look, I think the key thing is with our research and also taking that research in from the managers is now is not the time to panic. If you look at financial markets since about the 1950s, 51 I think it is, and if you look at every time the S&P, which measures the US stock market, every time that's fallen 25% or more, and it's just done that this calendar year. Every time it's done that in the 9 times since 1950, the following 12 months has actually been up on average 22%. Panicking and withdrawing or selling growth assets or really good quality assets, many of which are really undervalued at the moment, or we'd say pretty good value. It's not wanting to panic. And I just say to people that they really want to stay with the strategy, and now's the time they're going to be tested, and now they're going to be paid for taking a little bit of risk. This is not the time to go making wholesale changes in a widespread manner. We have made the decision to get a little bit of diversification, particularly on the MLC platform, where clients are using MLC Wrap, that we've now got the availability of the Bennelong concentrated portfolio. So we will diversify away from Pengana a little bit and halve their allocation, meaning that we'll be actually stepping into a bit of more growth and buying some of these companies at beaten up valuations. I think it's important that people also understand there's a lot of data to suggest that markets being forward-looking, i.e. people are looking out into the future and discounting back the performance and the cash flow of those companies, markets tend to take into account these things that are happening a few years in advance. And traditionally, markets actually perform worse in the 12 months prior to a recession than actually in a recession. So I think there's some data starting to come through that we may have seen the bottom. We've seen a lot of volatility in the share market. We're seeing months up 5%, down 5%. We've had a strong October, and of course we're reporting here to the end of September. So look, we're hopeful that we may have seen some sort of bottom in the market, but let's wait and see.
Great, well that was a really comprehensive update, and thanks for that, David. As always, I'll be in touch with everyone over the coming weeks just to run through the portfolio recommendations David highlighted just then. If you have any questions in the meantime, please feel free to reach out to either David or myself. Otherwise, we'll speak soon. Thanks again.
Thanks, Tom.